Good morning, everyone. It is the 16th of December, and it seems that we have continued lower in the S&P 500. We are below the 5-day moving average in the S&P, and we've just broken the anchor off of this low, and we're holding around the daily volume weighted average price for the day. I would say if we are anticipating a further drawdown, I would say keep an eye down for this level of 668. That's likely where we're going to see some buyers. If we undercut that 50-day moving average. Outside of that, we are below that 5, so it's cautious and it's not worth looking at. The cues are again coming down to the anchor from the September 25th low. Looks like we're going to come down into this area. We are just regaining the volume weighted average price for the day, but it is inherently choppy in here if you look at the shorter term time frame. So just be careful getting involved in anything right now. It's chopping around quite a bit, trying to decide what it's going to do. So I don't think it's a good day for any new open positions. Semiconductors continue to be weak down to that anchor from the low, from the November 21st low. Pulling down, trying to hold in there. Looks like it might be finding some supply. So keep an eye on it, whether we get a bounce. But again, it's not a good opportunity for any new trades. I say just follow up on some ideas that I displayed yesterday. We'll look at these at a slightly shorter term time frame. We'll look at them on the 5-minute chart. And then on the left, we'll do a quick 30-minute chart. So Monster continues to behave pretty decently. It's just regained the volume weighted average price for the day. It's a little overextended here, but at the end of the day, we have a rising 5-day moving average and all the other moving averages are good. So if you're involved here, just make sure you know where your stop is and honor that stop. Merck & Company didn't set up. It sold off this morning, so you can take that one off the list. Gap's holding up well. If we look, it looks like it's regaining the volume weighted average price. We look at this on the 2-minute time frame. We pulled back to the 2-day volume weighted average price, and it looks like we could be regaining the daily here. So, question is, do you want to get involved in a new swing trade when the markets are turning down? At the end of the day, on the 30-minute time frame, that 5-day moving average is continuing to rise. So on the scale of things, Gap looks one of the strongest stocks to be involved in if you are going to be involved. Say keep an eye on if you're going to get involved. It's say 27.20 with a stop below the lower day. Hold it for a day trade if it holds. If not, then get rid of it. Risk management is obviously key to everything. Levi's doing well. It did exactly what we wanted it to do. It pulled right back, regained a gap up this morning, pulled back. So we didn't really want that gap up this morning, but Levi continues to do well. That was one of the watch ideas. I didn't get involved. We have a rising 5-day moving average. It looked strong. Retailers seem to be doing well. And Zern didn't really set up and do what we wanted it to. It's kind of just chopping around here. It's a slow moving stock anyway, so it's not really something to be involved with, but it looks like it's setting up nicely. It's definitely, this range is definitely tightening here, right? Pulled in, pull up higher high, and then pulled in a quite a tight higher low. So I thought this was going to be the go, but it just seems to be chopping back and forwards on that daily time frame. And then finally, Bush is just like I said, I posted on StockTwits, looking at this one a little closer here. We're kind of running right into this big band of resistance and previous level of support and resistance, and we just run from $10.46 up to $17. So we run almost 80-70% on this. So it's likely that we'll find supply in here and we'll see a bit of a pullback. Take that one off the list. Outside of that, I will update you at the end of the day.